Financial Focus with Leo Leiden. Weekday mornings 8 to 9 on WBNW, 1120 AM and 102.9 FM. The Money Matters Radio Network. You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It is Chuck, Mike, and Tucker with you on a Jobs Friday. It's the first Friday in May, May 3rd. Tomorrow, one of my favorite days of the year as well, it's the Berkshire Hathaway annual meeting and the Kentucky Derby, which always fall on the same day. Did you realize that, Mike?
And May 4th.
And May the 4th be with you.
Indeed.
So, just a lot going on right now. So what a fantastic day to talk about what we saw in the jobs report this morning. Here's what we saw. 175,000 jobs created. That is below the expectations of about 240,000. Obviously, also then a slowdown from the revised 315,000 that we saw in the prior month. That prior month revised up by about 12,000 from 303 to 315. But the February data revised down by about 34,000 from 270,000 to 236. So those revisions net out to about a $20,000 net change to the downside there.
20,000 person, but yeah.
Yeah, 20,000 net change to the down. We know they're people. What else are they?
I hear you.
And so overall, this is a report that if you are looking for a sign that, hey, maybe the hotness that we saw in the economy is starting to dissipate, you've got a little bit of it here in a way that also still appears to be constructive toward growth and not necessarily pointing down towards recession.
Yeah, and market's reacting to it. This is a report that has a little bit of something for everybody. So, yes, we still had growth in the labor market, but it substantially slowed from average expectations, which are always off to some degree, as well as the previous month, which is the bigger piece here. Pretty substantial difference between 175,000 jobs created this month and 315 the month before. And then finally, that point on wage growth. Again, this does hop around a little bit, but if you continue to see some lack of big moves on average hourly earnings, again, that does not feel great for households if inflation continues up, but could be that downward pressure needed to control prices for the future if that wage growth continues to, again, increase but slow down.
So, overall, I think that this paints at this point in time, and again, this is one report, and I think it's important to keep that in context because it's not everything. It's one report, it's one data point, but we're starting to see a few sporadic data points out there suggesting some slowing in the economy. Not to the recessionary side of things at this point, but when you start to look at, again, you get this coming out today and it says, okay, the pace of job growth slowed for the month. Earlier this week, and granted, it's been a bad indicator of just about anything this economic cycle, but ISM manufacturing came in a little bit below expectations as well, and so that was something that we took note of. The job openings dropped a little bit more than anticipated. This morning, ISM services, the first sub-50 print on ISM services since December of 2022. So you're getting a few different things that now for the month of April, which is the data that we're collecting here, you're starting to get a few things suggesting a little bit of a slowdown. And remember, when I say a little bit of a slowdown, that does not mean you are getting a recession. I know that all of the recession hopers out there are like, oh, see, it's coming now. And I have no clue. But here's what I do know. It's really hard to have a recession when you're adding, still on average 200,000 jobs for, the last 3 months. It's really hard to have a recession when housing sales are up 7 to 10% year over year. And it's really hard to have a recession when you still have, basically every sector of the economy, aside from the one place where you are seeing kind of an interesting slowdown right now, just from the earnings that we're seeing. Maybe some of that semiconductor boom is coming off a little bit. But other than that, you're in pretty good shape. You got some warnings on consumer spending from retailers, but those are mixed. I mean, sure, Starbucks, reported bad earnings, but we covered the same day that, Wingstop had 21% same-store sales growth. So people just traded lattes for wings, which is fine. It's if there might be less sugar in them. I don't know.
We will be getting to the pork latte from Starbucks at some point later in the show today too. So that's a nice crossover.
Are they the ones that did the olive oil infused one, or is that someone else?
That is Starbucks indeed. I've actually tried it. Yeah, it's actually pretty good. I like olive oil, so I'm on board.
Do you think they could do a hot sauce crossover or something like that?
Well, funny you mentioned that, Chuck, because they're advertising spicy caffeinated drinks at Starbucks now. So I don't know that it's hot sauce, but yes, that is the newest trend in your caffeination world. Which honestly, from what I'm seeing, the Starbucks trends just seem to follow whatever's going on in the mixed drink and cocktail space right now, and so that's not terribly surprising. But we're getting way off base here. Another piece on the recession we've talked about before, the SOM rule. This is the piece that was kind of invented and made famous by Claudia Somm, an economics researcher and Federal Reserve official, right?
Yes.
So this one in particular takes a look at the unemployment rate and signals the start of a recession when the 3-month moving average for unemployment rises by 0.5 percentage point or more relative to the minimum of the 3-month average from the previous 12 months. And this has been looked at a few different times, and some articles bringing up the SOM rule, we're getting close to that 0.5% threshold. And that may be the case, but getting close doesn't actually indicate anything. That's why they say 0.5% or more. As of the April reading, you're now at 0.37%, which, yes, is closer to 0.5% than where we've been over the last 12 months, but again, does not signify anything in the way of recession. You did see a slight uptick in unemployment in this most recent report, which is why I brought it up. But, still sub 4% unemployment, still near record low unemployment, especially when you look at demographics such as the 25 to 54 population, which we've quoted before as kind of that key working demographic.
So this jobs report, we're once again kind of back to if this jobs report were to print 12 times over, you do it for a whole year, this is exactly what you would want to see in order to have a case for, hey, the economy is not growing, in excess of its capacity. And so you see some relief from those inflationary pressures while still seeing a return to, quite honestly, what's probably the sustainable level of growth in the U.S. given demographic trends, which is 1.7 to 2.2%. That's kind of where, if you're growing the population by a little less than 1% and you get productivity growth of a little more than 1% a year, that's kind of where you end up. So this is a jobs report that, look, we've been really critical the last few months. We've said, look, this is, these reports are not indicative of an economy that is going to be able to put the inflationary, piece to bed. If you get 11 more of these, which you're not going to, because as we've learned, the economy is never stationary. But this is a report that if I were to look at it and say, hey, is this what you want to see? The answer is, yeah, this is pretty much what you want to see wrapped up in here. One of the statistics that I love to look at is what we call aggregate payrolls, which is a combination of the growth in the number of people added into the labor force who are working, and wage growth over the course of the month. So I look at it on a 12-month rolling basis, because that way you can see, hey, what did aggregate payrolls, it's a great proxy for how much more in total are employers paying out in compensation, because it's not just how much are you paying to your current employees, but also how many are you adding, and so how much do your total payrolls grow. And the reason that I like this, it's a good proxy, in my opinion, for household spending, because yes, while you can borrow and do things like that, ultimately your spending ability in the long run is dictated by how much is being paid out in wages. That's what it comes back to. So when we look at this data right now and say, hey, where is this clocking in, you're at about a 5.5% annual growth rate in this survey right now. We're in this data set, and it is something that still is hotter than you would like to see. It's a series that prior to the pandemic was typically showing anywhere from in the 2018-2019 range, it was like 4.7 to 5.4%. That's where it spent most of its time. So it's a little bit above that, but this is a downward move from the 5.9% that we had last month, where we were starting to say, gee, are we starting to see a little bit of an uptick again? We had 2 months in a row where this series was moving up, and this kind of starts to reverse it. So again, one data point, but encouraging there. And if you can keep, seeing these prints coming in closer to 5% for these aggregate payrolls instead of, trickling back up towards 6 or 7, it makes it harder for the inflation numbers to print higher in the long run as well. So I think this is an encouraging report in that there's still growth in the labor market, but it doesn't look quite so hot that you get nervous about inflation. And I think that's being reflected in what you're seeing on the 10-year Treasury, which, is down, 4 to 5 basis points right now. So I think that's kind of what you're seeing here. Anything else that you want to add before we go to break, Mike?
No, let's go to break, and then we can kind of cover that market reaction and what else you might need to see in terms of data to get the Federal Reserve to finally make that shift towards lower interest rates, if that's what's going to happen this year.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands for the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, first segment we were talking about, hey, what is in the jobs report for the month of April? Now we want to talk a little bit about market reaction to it and kind of where things go from here, yeah?
Yeah, so, I mean, just starting off, you've got 3 major indices, Dow, S&P, and NASDAQ, all up substantially. NASDAQ leading the way, 1.6%.
Not as much as at the beginning of the day, though.
Correct. They've flattened a little bit. I think at pre-market trading, we were up 1.5% on all 3, perhaps.
Yeah, the Dow at one point was up about 500 points, now up about 379. The S&P at one point I saw up 65, so yeah, about 1.5%. And the NASDAQ still cranking along, but again, not doing what it was previously, where it was up north of 2, now about 1.6.
So the end-all be-all here is, will the Fed have enough evidence to cut rates at any point? That continues to be the story. That was the question being asked on Wednesday of Jerome Powell, and let's kind of get into the bit of the weeds here in terms of meeting dates. So we have another meeting on June 12th, 6 weeks from now, where the Fed will...
just before Father's Day.
...announce their interest rate setting policy. And right now, according to Chicago Mercantile Exchange, about an 86% chance that they do nothing at that meeting. And, you know, I think the safe bet is to say that they're not going to do anything at a bunch of these meetings. But thinking through the data points that you have by that June 12th meeting, you'll have one more of these jobs reports for the month of May. You'll have 2 more readings on CPI, which have been, big pushes towards the upside on inflation and have really shaken the Fed's path on where rates go. I have a tough time believing that even if you got really good data for those combined 3 data sets between jobs and inflation, that you would have enough evidence outside of a really strong push downwards towards recession for the Fed to cut rates by that June 12th meeting.
So, one interesting thing. The May CPI is released at 8:30 a.m., the final day of the Fed meeting, June 12th.
Oh, so you only get 1 reading, actually.
We're going to get 2. Did you say 2?
I said two, I did say 2 readings of CPI, but if it's being released, what did you say, the afternoon?
The morning, it's 8:30 a.m. So
they can't really take it into consideration then by the time
they can.
make it. Yeah.
They can.
Yeah, I mean, they've cut rates between meetings, so I suppose they can take anything into consideration, but it'd have to be pretty bad, I think, for them to say, or showing like significant disinflation or deflation for them to really take it into consideration for a rate cut.
Yeah, I mean, here's the interesting thing, and I'm not saying that I would do this, but I'm trying to put myself in Jay Powell's purple tie. And when I think about how they've approached all this, it's been with a dovish bias for the last 3 years.
No doubt.
And so, hypothetically, it's always good just to consider all of the options, even if you don't agree with them, just because otherwise you can't make an argument against them. So let's say that the next 2 CPIs come out and both headline and core print 0.2%, which is consistent with, low 2s on inflation.
Yep.
If the Fed gets back-to-back ones that print that after 3 months of hot but 6 months of cool before that, there's a case, if you are the Fed, and I'm not saying I would do this, but I am saying that the Fed might look at it this way and say, yeah, things got a little hot in Q1, but all of the other surrounding data from the second half of last year and from the subsequent first couple prints from Q2 are consistent with a 2% inflation range, and we think that Q1 is the outlier.
Yeah,
I could see them saying, yes, we have enough to be able to cut now.
You're right. Shouldn't rule that out. I would disagree with the decision-making process, but
yes,
I shouldn't rule it out. I think that by July 31st, you've got now several additional sets of data points on both PCE, CPI, the Personal Consumption Expenditures Report, the Consumer Price Index, as well as, what would that make it, 3 more jobs reports by that July 31st meeting to be able to come up with a more thorough conclusion. But you're right that this Federal Reserve seems to have a pretty spoken bias towards lower rates, and especially if they are on the path that they genuinely believe that's where rates need to go in 2024, they're going to want to get it done sooner than later, because the closer you get, I know they got asked this question specifically about politics at the last meeting. They responded the way you would anticipate, which is we don't take it into consideration and we will not change our policy based on where the election's going or politics or pressure. But in reality, you have to know that behind closed doors, they're thinking, look, if we want to cut these rates this year anyway, we're going to want to do so, my mind would be at the very latest July 31st.
Yeah, I mean,
you don't want to get out to September. You certainly don't want to do it on November 7th.
You're either going to have to start moving at one of these next 2 meetings, or you're not going to be able to until the end of the year, because you're not going to go just in November. Then, because if you go right after the election, that also looks bad. It's like, so you were holding this move until just after it. That doesn't look good either. I think it's important when thinking about the Fed not to think about what you want them to do or what you think they should do, but you have to think about what they think they should do. And that means that, hey, now, other side of this, what happens if you get 2 more prints at 0.4?
I again think that this Fed does nothing. I think they should go up, but I think they do nothing.
I'm aligned as well. I don't think they start talking about hikes, seriously, and I've said this before, until you see inflation get back to 6%, which is scary. I also don't think this is the kind of economy that has the ability for that to happen unless you see an oil price shock where all of a sudden gas is running $5 a gallon.
Yeah.
The mechanics of it just aren't there right now, and even then, gas at $5 a gallon probably slows the economy enough that I don't know how much prolonged inflation you get there. Let's take a quick break. When we come back, we've got Wall Street Watch, and then we're talking Apple.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years. And it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in rally mode as Wall Street sifts through the April jobs report released this morning, where 175,000 jobs were added last month, below forecasts of 240,000, while the unemployment rate ticked higher to 3.9% from 3.8%. Right now, the Dow is up nearly 1%, just over 350 points. S&P 500 is up over 0.75% or 43 points. Tech-heavy NASDAQ surging over 1.5%, up about 260 points, and the Russell 2000 is up 1.25% or 24 points. 10-year Treasury yield down by 3 basis points at 4.53%, and crude oil off by about 0.5%, trading at $78.53 a barrel. Apple shares up by 6.5% after the tech giant announced a massive $110 billion stock buyback program and forecasts a return to revenue growth in the current quarter. Chuck and Mike will have more on Apple coming up here shortly. Meanwhile, Amgen's chief executive said he was very encouraged by early data from a trial for the drug manufacturer's obesity treatment. Amgen also posted better than expected first quarter earnings, sending that stock up by 12.5%. Elsewhere, Block, the parent company of Cash App and Square, revealed a higher quarterly profit and also announced it would reinvest in Bitcoin through the end of the year. Block shares are up by 2.5%. Expedia reduced its annual sales outlook as a revamp of its Vrbo brand continues to weigh on growth. That stock down by 13%. And Berkshire Hathaway will host its annual shareholder meeting tomorrow. Paul LaMonica of Barron's will give us his full preview on what to expect coming up here on the show at 11:45. I'm Tucker Silva, and that's Wall Street Watch.
Mike, have we ever had a less anticipated Apple earnings report than the one that just happened?
Probably, but it's been a long time.
It just feels like, and maybe we've just stopped talking about it so much, but I don't know. The focus just has not been on Apple, even in the tech sector. It's been all AI and all that hype and everything, which is fine. We don't have to always look at Apple.
It's fine, and perhaps it's been a good job by Apple of letting the cat out of the bag in terms of, hey, we're planning on disappointing all of you in the upcoming quarter, and so be prepared for that news, because we pretty much knew that sales were going to be ugly in China, that they didn't have any new product in the United States, and that sales growth was going to be pretty abysmal for the most recent quarter before they reported it last night.
So Apple reports earnings, and in terms of, what to take from it, so revenue was down year over year by 4.3% to $90.8 billion. Still selling $1 billion a day worth of Apple stuff, which is always fun. The big things that I take away from it, there's been some pointing to the margin improvement that they had. Their gross margins are in the mid-40s right now, which is just
incredible for a
insane.
Hardware maker.
It's insane, and they're getting better not because of the hardware, but because more is going to services, which is 70-80% margins. But even for Apple, look, if you have 35 to 40% margins on your hardware, that's not normal. In fact, that's very abnormal. Normally, it's low single digits if you're a hardware manufacturer. But here's the piece that I think is driving markets, and it's not just me who thinks this, by the way. They announced a $110 billion stock buyback program for the year. To put this in perspective, $110 billion is the annual GDP of Guatemala. It's the annual GDP of Puerto Rico. It's the annual GDP of Kenya and Bulgaria. It is $15 billion more than the GDP of Costa Rica. I mean, there are
probably
only
exceeds the market capitalization of what, more than half the S&P?
Out of the 180 countries in the world, only 60 of them generate more in economic activity than what Apple is doing in stock buybacks this year. It's nuts. It's just insane. And so you do the math on it. They're buying back $110 billion. Market cap, is $2.8 trillion at this point. So they're buying back like 3.5% of their shares on an annual basis here now. And this is something that also is not really affecting what they have hanging out there in terms of, assets on their books. Their overall cash level is down just because they're moving, money away from cash and towards, some other things that they're investing in, more long-term assets. But they're still just sitting on, just from a cash perspective, they're at $73 billion now, which is, again, just an insane amount. I mean, what bank do you put that in? How do you handle FDIC insurance for that?
Hopefully not SVB.
Yeah, those are things. Who's the banker for that? That you get the call from your Apple rep and you're like, oh, am I going to lose this client? So this is the thing that I kept coming back to on Apple is, as much as we can talk as people like to talk about their demise and things like that. I don't really know how you price a company that makes as much money as they do, because the odds of them, going to zero have to be just about the lowest of any company in history, which I know it's always scary when someone says that, right? Like that
Sure.
makes all of us nervous because we don't like to think that way. But you try to figure out, like, what's the path to Apple going out of business? Is there one in the next 20 years?
No, but honestly, for the average person, that's probably not the most. I agreed with you. Like the idea of Apple ceasing to exist in the mainstream of technology that we all utilize right now is tougher for me to envision than it was for BlackBerry 30 years ago or 20 years ago, whenever BlackBerry was making its heyday at that point. I think some of the important distinctions here, right? Like Apple, among the big 5 tech companies that have reported earnings over the last 2 weeks, which I'm throwing Amazon, Apple, Google, Microsoft, and Meta into that category, right?
Yeah.
Those are the big 5 that I'm talking about.
The Fantastic Five.
In these circumstances. And among those 5, to me at least, Apple and Facebook, Meta, are the 2 where I've kind of questioned, like, what exactly is the artificial intelligence story with you two? And Meta has said, we're going to find one by spending $40 billion a year. And Apple seems to be saying, yeah, we'll work on figuring that out. But in the meantime, here's a bunch of our cash that we have sitting on the sideline. We're going to give it to you as shareholders instead of investing it in something that we're not 100% certain about. And today, investors seem to care about that.
And the piece that I guess if you're an Apple shareholder or fan of Apple, if you're trying to be, comforted by this, we've talked about this a lot. Apple basically never moves first.
Right.
They are not the first man through the wall with anything. They didn't have the first smartphone, as you mentioned a second ago. BlackBerry did. BlackBerry dominated that market. And Apple said, no, we're going to come in and we'll just take it from you. The tablet market, no one could get to work. Microsoft was making them. BlackBerry was making, everyone was trying to make tablets. All the major computer manufacturers, Dell, HP, they were making them. And no one could figure it out. And now the iPad is just, a fixture everywhere. Smartwatches. Okay, yeah, Fitbit's making them. They can't figure out how to make money. Boom, here comes Apple. They did it. They didn't move first, but they moved better. And that's kind of what they do. So I know that there's probably been a little bit of agita amongst Apple shareholders and fanboys saying, gee, what gives, guys? Why no AI? Well, it's not really Apple's MO. Even on the, what's the name of the headset? The Vision Pro that they have?
Yep.
They're not the first ones to do that.
Right.
Now, I also think that they're not I think they moved earlier than they wanted to for some reason. I'm still not quite sure why they did it, and it's one of those things that you look at and you kind of go, this is out of character for them, because they released kind of a half-finished product that is pretty much in a large public beta test right now. But even there, they still didn't move first. They said, okay, someone else is doing this and trying to, get into this market. Great, let's wait a couple of years and then we'll try something.
The counterpoint to all of this, Apple fandom would be, rarely in U.S. history do we see the same technology companies especially dominating business for multiple decades. Right? You go take a look at the top tech companies in 1990 and then 2000 and 2010. They tend to change. IBM, the 4th largest company in the United States back in 1990, is I mean, still very much exists, just like we just said about Apple, but has no real influence on where the technology market as a whole is going. And the same can be said for Cisco leading into the dot-com bubble and Oracle and many others that have fallen by the wayside. It's the Microsofts of the world are the exception, not the rule in the technology space. And so it's fair to ask yourself, is Apple at some sort of turning point here because of some macro trend going on in the world right now? And right now they don't have that next answer for what's going to drive growth. History tells us, especially the last 15 years, tells us that they will find that pretty soon and start selling it.
I actually just pulled a list, and this is just America's biggest. It's the Fortune 500 list from 1980, just because I was curious here. And the first thing that you notice is that there are almost no tech companies that are in even the top 10. The top 10 companies of the Fortune 500 in 1980. And granted, some of these have been through mergers and this and that, but Exxon, General Motors, Mobil, Ford, Texaco, Chevron, Gulf, IBM, GE, Amoco. Like, those are your top 10. There's one tech company in there.
Yeah.
And you go down the list and try to find other ones, and I'm even looking through, like, the top 20, top 30. There's pretty much no one else. I mean, this is the other piece, is that this era of tech dominance is kind of a new thing. We think that this has been how it's been for a while, but it's really only the last 5 to 7 years.
Right.
You know, you go back to 2015 and 2016 and before then, and tech companies didn't occupy the space in the S&P 500 or in just the overall economy that they do today. I mean, this list from 1980 is wild. Shell Oil, U.S. Steel, Conoco, DuPont, Chrysler, Tenneco Automotive, AT&T, Sunoco, Occidental Petroleum, ConocoPhillips, Procter & Gamble, Dow Chemical, Union Carbide, United Technologies, Navistar, Goodyear.
It was a prime time of U.S. manufacturing.
Yeah, it really tells you just how much things have changed, doesn't it?
It's gone from manufacturing to consumerism.
It's absolutely wild here. And some of these names just a blast from the past, too. I mean, I enjoy seeing, like, Textron in here. And, who else do we have that's no longer around at this point? Like, in 1980, Purina Brands was the 67th biggest company in the U.S. by revenue.
What?
I know. Greyhound Bus was the 65th. I mean, this is just wild stuff.
Yeah. You'd have a tough time finding many that were in the top 50 that are still there today.
Yeah. Let's take a quick break here. Any more Apple talk, or are we good to move on?
Let's move along from Apple at this stage. Stock reacting well to big spend down of some of that cash for shareholders this earnings report. Let's take a quick break. When we come back, I want to talk a bit about backdoor Roth IRAs. What does that mean? Roth IRA has been getting a lot of attention over the last few years. What is the backdoor Roth? What are some of the pitfalls? We'll cover that next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
A 2023 report from LawDepot.com shows that 73% of U.S. adults don't have a documented estate plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. You don't want to be a member of that group. Proper estate planning is a critical element to you being able to pass along your assets to your family and to enjoying your retirement years. If you want to avoid making mistakes that could prevent your family from benefiting from your financial success, then call our office today and ask for a copy of our new guide called Leaving a Financial Legacy. We tackle critical estate planning topics such as long-term care costs, estate taxes, and more, all from a financial standpoint. Call today at 800-393-4001 and get your copy of this free guide. 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, Mike, let's talk a little bit about backdoor Roth IRAs. What the heck are they, first of all?
So a backdoor Roth IRA is, quite frankly, it's just a loophole. There is this rule out there that you cannot put money into a Roth IRA. You can't contribute to it if you make too much income, and the backdoor Roth IRA is a way of getting around that limitation. There are some things that we talk about in personal finance and investing that are, I think, for a lot of people, pretty easy to comprehend and follow along, almost logical, like the reaction of bond prices to interest rates, for example, or the fact that traditional 401k is pre-tax and Roth is tax-free. Like, some of these things are fairly easy because they've been set in stone for so long for people to comprehend. Backdoor Roths falls into that category of so complex and somewhat illogical that it's tough for people to wrap their heads around sometimes. And so effectively it's this loophole way of getting money into a Roth IRA if you make too much money. But just like other complex topics like NUA, net unrealized appreciation, there are so many different pitfalls when it comes to this that could end you up in a, I won't say nightmarish tax scenario, but a pretty difficult one if you screw this one up, that it's important for us to talk about every once in a while. Roth IRAs have become immensely more popular. They're about to become even more so because now 401k providers are required to offer them for those making big catch-up contributions and for employer matches and things along those lines. And so I'm sure that you're likely to hear more about this backdoor Roth strategy so long as the IRS and Congress doesn't close the loophole. And my key message to you is that if you are considering taking advantage of it, it is immensely complicated. And if you don't have an expert looking at it for you and understanding your specific situation, such as whether you have money in IRAs or 401ks and where that is located, it can lead to pitfalls for you. And so please, 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 if you are considering this strategy or if you are not familiar with what it is, speak to an expert. You're welcome to call the Armstrong Advisory Group and talk to us about the different strategies that we employ with our own clients. But please, please, please understand that this is one of those more complicated situations that I've seen a lot of people screw up. The phone number for the Armstrong Advisory Group, if you'd like to talk to somebody and have a sit down and talk about your overall financial strategy, is 800-393-4001. Again, that's the number for the Armstrong Advisory Group, and it's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, did you see that Dave & Buster's is going to allow people going to their locations to bet on the outcomes of arcade games that they or other people are playing?
Yeah, is this maybe one of those final indications that we are overdoing it on gambling?
We're idiots.
I love it.
I mean, like,
Tucker's going to be going down to Dave & Buster's every... Hey, kid, I'll give you half my cut if you throw this Pop-A-Shot match.
I mean, it gets kind of competitive with Pop-A-Shot with your buddies or whatever. I mean, we did this like a month ago. We weren't betting, but if the option was there, yeah, absolutely.
But I guess here's the thing. So Dave & Buster's isn't doing this for free. They're clearly going to take their vig. They're going to take their, 5 or 10%, whatever it ends up being.
No different than any other book.
But why would I not just put my $5 down on the Pop-A-Shot table and bet my friend then?
That's a valid question. I was wondering the same thing.
Because we all have Venmo.
Yeah, we all Venmo.
Yeah. We can make this happen.
Is Dave & Buster's going to do a search of your body to make sure you're not bringing cash in to bet outside of their betting app or something?
Yeah, that ultimately would lead me to not use this service because it makes zero sense from that front. But if there was some sort of perk for signing up, like they give you bonus bucks or something like that, like we're seeing with all these sports books, then yeah, sure.
And I say this as someone who loves Dave & Buster's. I think it is.
Oh, I love the Busters.
I'm just imagining that dad who's had a few too many to drink and is gambling with his buddy in front of his in front of their combined 7 kids. I'm like, is this really the image that we're looking for with Dave & Buster's? I just, boy. Yeah, it's getting a little bit loony with
it's
rack them up again.
It's one step closer to the Disney betting app.
Yeah.
Let's take a quick break here. Hour 2 coming up in just a bit.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts,
Can you tie my shoes?
in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from LawDepot.com, 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here, is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you here on Jobs Friday. And in case you missed it, the jobs report came out at 8:30 a.m. this morning, also known as the Employment Situation Report from the Bureau of Labor Statistics. And what it showed was 175,000 jobs created for the month of April, below expectations of 240,000. The unemployment rate rose a touch to 3.9% from 3.8%. And we also saw average hourly wages up 0.2%, which is something that the Fed would very much like to see, because if wages are not going up too quickly, then it makes it very challenging for inflation to stick around. So on the back of this, we end up with the 10-year Treasury being bid up by about 5 basis points to 4.52% right now. We've got the S&P 500 up 44 points. Dow is up 322 and the NASDAQ up 267 points. So all three major U.S. indices moving on up so far today. We've got oil down another 48 cents a barrel to 78.47. The AAA national average for gas prices ticking down here today, 0.4 of a cent, so nothing particularly exciting. You know, you're not going to go out and celebrate because of that. But it does seem like we're seeing a top forming in gas prices in that 365 to 370 range. And given that we've now started to see oil prices moving down, wouldn't be too surprising to see gas by Memorial Day back in the probably 340 range, maybe 350, depending on exactly where things go. Gold today down $8.60 an ounce to $2,301 even, and that is what we've got moving in markets today. Mike, it's always exciting to me when we get pieces published about the different generations, because it just gives us an opportunity for all of us, because we're all part of a generation that is uniquely despised. That's
True.
the thing. The only generation that I don't think you can ever say anything bad about is the greatest generation, and that's because basically the whole world owes a debt to them for saving the world from the Nazis in World War II.
And I'm sure before they did that, they were hated by their parents' generation. So
I don't think they were. There wasn't really much of a before. They turned 18 and went to war.
Yeah, that's fair. Okay.
They didn't really have much of a say in the matter.
Yep.
So the baby boomers, uniquely despised because every generation that's younger than them feels like the baby boomers have basically used up all of the world's wealth and resources and taken it all for themselves.
Okay.
Gen X, uniquely despised because all Gen X does is talk about how no one talks about them. Millennials, uniquely despised because of participation trophies and avocado toast taking up all their money.
Mm-hmm.
Gen Z, uniquely despised because they're always on their phones. Now we have, this piece here. Again, like every generation, I try to be, very equal in this. Like we all have unique reasons that people don't like us. So you get this piece from Bloomberg. It's an opinion piece, but it's talking about how Gen Z is frustrated because they feel like they are financially behind where they should be. Now, as a proud millennial who eats their avocado toast every morning in the cup of my participation trophy.
You eat your toast out of a cup?
It's bad toast.
Yeah.
I remember 12, 15 years ago, 2011, 2012, the same articles were written about millennials. Oh my goodness.
They're not buying homes.
It's so hard to buy homes now. We can't afford this. Like we can't. And sure enough, it's like clockwork that you end up with the same pieces being written about a new generation. It's not to say
different
that
problems.
Yes, it's not to say that Gen Z does not have financial problems, because they do. My point is rather, every generation has their own unique financial problems that they deal with, and I don't think you can say that any of them are inherently better or worse, because it's still so early that we don't know how this is all going to play out, because those same millennials who are complaining, oh, we couldn't buy homes, in a lot of cases we've seen the millennial home ownership data now suggest that more millennials actually own homes at age 35 and so on than prior generations did. And so you kind of have to wait for this to play out before you claim that someone is facing this unique hardship, in my opinion.
Here's what I think is reasonable. If I were in this demographic, or really any demographic right now that didn't own assets going into 2020.
Yeah.
So home, stock portfolio, any of that stuff. Maybe I was too young. Maybe I didn't have the ability to save. Any of those things. Then I, too, would probably be pretty fed up with the narrative that I keep hearing from everywhere, which is, hey, I know inflation stinks, but this economy is really doing well. Unemployment rates are really low. And, I too could see how that would be frustrating to hear. Like, yeah, I understand that I have a job, but guess what? I can't buy a home. Interest rates are through the roof. Rent keeps going up. I too would be frustrated by that scenario. And I think it is worth acknowledging that this economy, for a large portion of Americans, does not feel good. It is uncomfortable, even still, now that inflation has come back to what I think most would describe a more reasonable pace, while still a pace that's higher than anticipated. So is that uniquely a Gen Z problem? No. Is it probably heavily weighted towards a Gen Z problem? Yes. But I think the piece that gets missed too often is, and I don't know the exact answer to this because we don't know what that next movement is going to happen, that next business cycle is going to look like. But I think genuinely that if I had to choose between coming into the labor market at this stage, graduating high school or graduating college at this stage right now with the problems that we have with inflation, compared to, I don't know, coming into the labor market and into this overall situation, certainly in 2008, but let's take other recessions throughout history too, like the 1970s. I would certainly choose today over those different periods of time. It's not to say that it's good. It's just to say that I'm not sure you're going to like the economy that this turns into over the next few years any better.
And this is, you struck something that I always say, which is, okay, let's say that you did have the ability to transport yourself to any point in time, anywhere in the world. Where are you? And obviously we don't know what happens, in the future. I'm talking just in the past. Like, we don't have the time machine that goes forward yet. It only goes backwards. If economically, you're just making a decision based on economics, not even other stuff like polio or war or anything like that, but just economics. If you say, hey, I want to transport myself to any point in time and anywhere on the world in the past, what do you pick aside from today? And there's like a small handful of, a few years where you could be like, okay, that's probably it. But that's also just looking at the economic piece. Like, sure, would I love to go back to the Industrial Revolution and be a steel tycoon? Yeah, but I'm probably losing like 3 of my 7 kids before age 5 because of childhood diseases.
Yeah, I mean, again, I think you could say something positive about the 1990s. Like, hey, that was both a period defined by great growth, great labor market growth.
And then everyone lost their money in the tech bubble, though.
Right.
There is no period in history that's perfect. It's either the party always ends or you're born when the party is ending. And that's kind of what it is. There is no perfect time to go back to. So I understand that there are challenges that people in their 20s are facing. It's not to say that they don't exist, but it is to say that there is always another problem out there economically. It's never perfect. And I say this with people. I always give my spiel about the stock market. People say, well, I'm nervous. I want to wait until things look more stable. And then I give this speech, which is, okay, the 1900s. Let's see. And just hitting on the big ones. You had World War I. Pretty bad. Then you had the Great Depression. Also bad. World War II. Really bad. Korean War. Quite bad. Vietnam War. Bad. One president assassinated. Another president attempted to be assassinated. One president almost impeached and then resigned. You've got Gulf War I, Gulf War II. Another president almost impeached. I mean, like, you go through this laundry list. You got September 11th, the tech bubble, all these big things. There's never a time in history where everything just feels good.
I have a good example of this, I think, which was I was out to dinner a few months ago with my grandfather and his longtime partner. And she was recounting a story that she had with a few family friends that are all of the same age group in their mid-80s, and they're recounting the glory days that they were talking about, the 1960s. And she interrupted and she goes, I think the guy's name was Bob. She interrupts. She goes, Bob, like, I'm sure that was great for you, but can I just point out that period of time sucked for me as a woman trying to go through college and get into business and work in the market. Like, I faced all sorts of problems that you never saw on a day-to-day basis in the 1960s. So don't give me that garbage about the glory days. I'll take today over 1960 any day of the week. And I think it just speaks to exactly what you talked about, which is, the glory days always seemed good because you're going to live back in what you defined as that nostalgic period of time when life was going really well for you.
Let's take a quick break here. When we come back, we've got a little bit of trivia that we're going to do, and then we'll talk a little bit about the Treasury Market and what's going on there.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, Pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you want to leave behind a financial legacy for your family, you need a proper estate plan. Hi, this is Chuck Zodda from the Armstrong Advisory Group. In our new monthly guide, we'll explore how and why the estate planning process is crucial to help you build a plan that will afford you comfort and peace of mind as you enter your retirement years. The guide is called Leaving a Financial Legacy, and in it, we'll unpack ways to create a plan that takes into account your entire investment portfolio and your business holdings, including real estate. We'll also explore strategies on how to mitigate your risk from long-term care costs, which could affect you in the future. Call right now at 800-393-4001 to request a copy of our new guide, Leaving a Financial Legacy. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Let's do a little bit of trivia here on the Financial Exchange. It's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. Well, Sunday night, Netflix will air the roast of Tom Brady. The event will be hosted by Kevin Hart and feature Patriots legends Drew Bledsoe, Julian Edelman, Rob Gronkowski, Randy Moss, and Bill Belichick. Tom Brady has been very busy in his post-football playing career. He has bought into multiple professional sports teams, upped his commercial appearances, of course, and taken on new business responsibilities. Last fall, Brady was hired by an airline to be a strategic advisor. Trivia question today: which airline hired Tom Brady to be a strategic advisor? Once again, which airline hired Tom Brady to be a strategic advisor? Be the sixth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the sixth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
The Treasury market is getting squeezed from all sides, is the headline from the Wall Street Journal. The subheader, inflation and deficits are lifting yields and jarring the stock market. Mike, I'm going to come back to this deficit thing to start off once again, because if whenever rates are going up, it means that the deficit is a problem. Then what do we say when rates go down for 3 or 4 months, as they did later this year? Did the deficit suddenly just not exist anymore? Did we start paying off? Were we running a surplus during that time?
We were not. This was a big story at the end of last summer when rates started moving. Everybody was guessing as to why, and deficits were mentioned. And this is not to minimize the just huge level of debt that we have and the fact that it may turn out to be a massive problem for generations and decades to come. That is not to minimize that. But you're right that every time rates move, we seem to we frequently attribute it to deficits, and that's not seemingly what's happening right now. I mean, you are seeing definitely move in Treasury yields because of expectations around inflation, but are we having any issues issuing new Treasury debt out there? Like, are we failing auctions? Are we having to intervene there in order to make sure that all these Treasuries get bought? The answer is by and large no, almost uniformly no. Because
on October 31st of last year, the 10-year Treasury had gone up to 4.93%. By December 31st, it was down to 3.88. Mike, did the United States improve its, fiscal picture over that 2-month period?
It did not. No.
It didn't. And then now it's gone back up to the 10-year Treasuries at, 4.5 and change.
Right.
Did a bunch of investors suddenly wake up this year and say, hey, you know what? Do you guys know that the U.S. has a lot of debt?
Also no.
Did you guys know that the U.S. has a lot of debt? No, like the people who are investing billions and trillions of dollars in bonds, they're not idiots. They're not. Like they're very smart people. And so, yes, the level of debt that's out there may be concerning, and we've talked about.
Can we talk about that? Let's go there then, because this is, I agree, kind of useless in terms of short-term moves on Treasury yields. Long-term, why other than just the distaste of what's the latest metric on the amount of U.S. government debt per citizen? It's massive. It's hundreds. I believe it's over $100,000 per person, but. What is the practical implication in terms
Here's the upshot, yeah.
Wild theories out there in terms of what could go wrong?
The upshot is, look, if you have more and more debt and you have to pay, large amounts of interest on it, then a bigger percentage of your tax revenue goes to just paying interest, and you can't pay for the programs that you actually want to run, whether that's defense, Social Security, Medicare, pick whatever it is. If you don't want to run any of these programs, that's fine. You're entitled to that opinion as well. I'm not saying that you have to, but that's the issue that you run into.
Or you issue more debt to do that.
Which in turn then makes your interest even more of a percentage of the tax revenue that you're paying, and so you end up in this spiral that eventually you either have to do a huge devaluing of your currency in order to get out of it, or you end up just saying, okay, we're going to do debt jubilee and wipe out the debt, and then it's okay, what are we really doing here?
Well, then no one's going to ever lend to you ever again.
Well, I won't say that. It depends how you do it. You could get creative with it. If it's a jubilee with balloons, who wouldn't like that? So those are the things that you can potentially run into. It also is something where, hey, if you go through that currency devaluation, then you have high levels of inflation, which no one likes, or you go to, a very austere policy, which is something that we've also kind of found that people don't like it when you take away stuff that you've been spending on them. So it's... You don't have any great, easy way out of this, but this is also not something that causes 1 to 2 month moves in the Treasury market.
No. If you wanted to try and convince me that, hey, because of the irresponsible borrowing of our government over the last 20 years, that the next 30 years are going to be defined by higher interest rates and higher inflation,
I can buy that.
You could get me there, right? I could get there. But the day-to-day moves on Treasury yields being squeezed because deficits are suddenly being recognized as high in the United States, facts not in evidence. And by the way, facts not in evidence globally either, because as big as our debt problem is, Go take a look at countries like Japan, who, on a debt to GDP level are significantly worse and not being defined by super high inflation for the last few decades.
Yeah, if you want, now granted, there's a small
Huge
list
difference.
of countries that are, have higher levels of debt, but again, it's, look at what's going on with, Europe and interest rates. They're not spiking because Italy has a debt to GDP ratio that's, 13% worse than ours. It's not the only thing that matters to yields. Let's take a quick break. When we come back, we've got the trivia answer, and then we're talking about Bill Gross, the former bond king, with a very profound statement.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. All of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, which airline hired Tom Brady to be a strategic advisor? That would be Delta Airlines. On September 6, 2023, it was announced that Delta Airlines had hired Brady as strategic advisor. Delta's press release indicated that Brady will help advise on employee training and teamwork tools for the airline's 90,000-plus employees. Two winners to announce today. Winner of the Financial Exchange Show t-shirt was Robert from Reading, Mass., and the weekly winner of the $100 gift card to Applebee's was Norman from Portland, Maine. So congrats to both winners there. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, did you know that former PIMCO Total Return manager Bill Gross is a big stamp collector?
I did not. Learn something new every day.
He has a huge stamp collection that I guess is worth millions of dollars.
Well, I would hope so. If you're the former Bond King, you can afford a decent stamp collection, right?
So stamps are kind of his other thing. But Bill Gross saying in a note that was published yesterday, hey, the whole strategy that I ran for 20 years, this idea of total return in bonds, which is not just clipping coupons, but playing changes in yields and ratings and things like that, hey, I can figure out ways to make money other than just clipping a coupon. Bill Gross saying, yeah, that strategy won't work anymore.
Which if you're PIMCO, without Bill Gross running that fund still, I believe, then you're probably not too happy about that comment. What's his point? That just, he happened to run that fund during a time when interest rates consistently fell and that's what made it work?
Yes.
Seems like more of it was luck of timing than bold strategy when it came to bonds.
So, and again, he's saying, look, the U.S. has so much debt that yields are going to have to go higher, which, again, may be true. It might not be. Like, we don't know. I acknowledge that it's very much a possibility. But Bill Gross, I'll also add, went to Janus after he, left PIMCO and had a pretty bad run there for 6 or 7 years, even when rates were continuing to move favorably for bonds. So there's no investor that's right all the time. And I think that when you look at what Bill Gross is saying here, sure, exactly what he did isn't going to work anymore because yields are not going to move from 16% down to 3% over the course of the next 20 years because they're not at 16%. But the idea of, hey, can you still use, a total return strategy to try to generate above index returns in the bond market? Sure, of course you can. It doesn't mean that those are going to always be positive, but yeah, of course you can still use the strategy. You're just going to have to adapt to what the conditions are today.
I guess importantly with this general conversation about bonds is again, identifying like why you own anything in an investment portfolio, I think is important. Right?
Yeah,
I have bonds. Why am I owning bonds? Is it because I want to make a whole boatload of money on them, like Bill Gross attempted for 40 years? Is it because I want something that's going to do something similar to what CDs are going to do? Like, what is the intention that I have with owning this asset class? You should be asking that with everything, whether it's stocks or foreign stocks or cash or bonds or crypto. What is my intent with this specific type of thing, and is it actually designed to do what I am hoping it will? I think, pretty important question to ask yourself.
Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for some problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of their new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, there's a piece in the Wall Street Journal talking about how Americans are continuing to hold onto their cars longer. U.S. vehicles' average age hit a record 12.5 years last year, increasing for the sixth straight year, according to S&P Global Mobility. And the reasons for it, I think, are very simple. New cars continue to get more expensive. Insurance for new cars continues to get even more expensive. And so people are saying, I'm going to stick with my car longer. And as someone who, proudly has done this with both the vehicles that I've ever owned, you ride it till the wheels fall off.
Yeah, that is becoming, like, the insurance piece to me is the very interesting part of this one, with just the insurance costs that you're seeing across vehicles in general, but on new cars in particular, where the parts are much more specialized and much more expensive to replace. I'll be interested to see how dramatically that insurance cost diverges over the next few years. I own two Hondas that are 9 years apart in terms of manufacture year, and you would anticipate that the insurance cost would be substantially higher for the newer car to begin with. It's about a 50% cost difference between these two in terms of annual insurance costs. And I expect that to go further. And by the way, it's a Honda, right? So we're not talking about the most expensive replacement parts to begin with. But I am, the more I think about it, just a bigger proponent of driving vehicles until they fall apart. And I've heard the argument from others like, I really want a newer vehicle. I can get much better mileage. But these days, when you do that math out at, even $4 a gallon gas, let's assume we get there. Like my old, 11-year-old Honda now, I think is getting me 20 miles to the gallon. It's not great in comparison to new small SUVs. But how many years is it going to take me to make that up if I purchase a new small SUV on the gas savings? It's going to take a really long time. I better really like the drive of that new car. And for me, I don't care how embarrassing my car looks. If it's metallic blue and has sap from all the trees that have dripped onto it that look like bird poop, oh well. I'm not trying to make a statement in the first place.
Would a detail kill you, Mike?
Yeah, I would.
Oh, okay.
I'm not going to detail my 11-year-old car.
Why not? Get that sap off of there. Come on now.
Yeah.
Mike, do you name your cars?
My kids do.
What's the name?
I think that one's Blue Betty.
I like it.
It's good.
Blue Betty, yeah.
Bam-a-lam.
Yeah.
I like it. Yeah. Tucker, what about you? You big into
naming cars?
No,
I don't name my cars. No, I'm not silly. My car's name is Jetta.
Oh, yeah. It's
manufacturer named it.
Yeah.
So why change it?
They interviewed a woman in this piece. The stories that they have in here are actually really good, I think. She named her 2004 Cadillac DeVille the Pearl. It's white, obviously, as you would expect. And then they also interviewed a guy who has a Toyota Tacoma with 300,000 plus miles on it.
Good for you.
My favorite part of it, though, is so that they have a picture of him standing next to the truck, and he's wearing a Bitcoin hoodie. He's like, yeah, like I drive my truck forever. And then he's wearing a Bitcoin. It's like those two things are so polar opposite in terms of practicality versus just, hey, whatever, man, you know?
He's also a financial advisor wearing a Bitcoin hoodie. I just have a lot of questions.
There's a lot going on here. And he lives in Idaho. What I would love to interview this guy.
Financial advisor from Idaho wearing a Bitcoin hoodie, driving a 300,000-mile Tacoma. Good on you.
From 2000.
Yeah. Yeah, I am genuinely hoping that my 2013 Honda CR-V is the first car that my kids get to drive 9 years from now when they are eligible to do so.
Yeah, my first car was my parents' 15-year-old minivan.
Yeah, that's what I'm looking for.
Yeah, it's what you want in a first car. You know, it's supposed to be
ugly,
rusty. Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica from Barron's. We're talking Berkshire Hathaway right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island. And registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
As promised, we are now joined by the one and only Paul LaMonica from Barron's. Paul, how are you today?
Good, thanks. How you guys doing?
We're doing well. You've got a piece up talking about Berkshire Hathaway and Coca-Cola. And obviously Warren Buffett, we know, is a huge Coca-Cola fan, and he puts his money where his mouth is. But you're talking a little bit about, hey, does Berkshire actually have any appetite for adding to their exposure to Coke? Your thoughts?
Yeah, I don't get the sense that they are going to. They've, pretty much held that stake at 400 million shares, for a very long time now. And, Coke stock, while, doing a little bit better than Pepsi very recently because of, earnings, has been a bit of a, kind of flat sort of market laggard. I mean, there's not a lot to be excited about with regards to sales and earnings growth. But that being said, you got to love the irony here. Berkshire Hathaway famously, despite having a lot of cash, doesn't pay a dividend, but Warren Buffett is more than happy to get dividend checks from the companies that he owns a big stake in, and that definitely includes Coke. So Coca-Cola, with that steady dividend, you're looking at almost $800 million in dividend payments that Berkshire Hathaway is going to get on the Coke dividend this year, which just it all adds up over time because this is a company that Berkshire Hathaway has loved and held for many, many years. But right now, the stock is trading at a somewhat pricey valuation for a sleepy consumer staple stock. So I think they're probably looking for bargains elsewhere.
Paul, just talking a little bit about the dividend piece, it's an interesting contrast with Apple, which is a major holding for Berkshire Hathaway as well, and then Apple yesterday announcing this $110 billion buyback plan. Can you contrast maybe the different holdings there and their approaches to, returning capital to shareholders and how both of them still fit into the Berkshire umbrella despite those differences?
Yeah, that's a great question. I mean, realize that Apple also pays a dividend and is increasing its dividend as well. Of course, Apple's dividend yield pales in comparison to what Coke pays as a more mature consumer staples firm. But I think that Berkshire itself always likes to reward shareholders with buybacks when possible. So I don't see any disconnect at all with regards to what Apple is doing right now, maybe focusing more on share buybacks over dividends, and what a company like Coke is doing that has a very high dividend yield. Berkshire Hathaway and Warren Buffett really love having companies that reward shareholders when they use their cash either to give it directly to shareholders or reduce the share count and boost earnings per share.
When we look at the overall turnover of the Berkshire portfolio, it's typically pretty low, correct?
Yes. There have been some holdings that they've shed in the past. I mean, Wells Fargo was a stock that they owned, but obviously with the scandals there in the past couple of years, it's not something that's part of the portfolio. IBM is one that Berkshire used to love and then didn't. So look for turnover perhaps, but nothing dramatic.
Is there anything new that they've been, starting to build positions in, and do those new positions tend to follow the same approach from a dividend or return of capital standpoint?
Well, what's interesting is that you are seeing, and it's hard to know exactly because the company doesn't break down who runs what part of the portfolio, but with Ted Weschler and Todd Combs being the investing lieutenants for Warren Buffett, you are starting to see some growthier names in the portfolio. Amazon now is one, Snowflake, the software company. You've got Liberty Sirius, XM as well. Those aren't your classic Warren Buffett, cheap bargain value stocks per se, but neither was Apple when for a long period of time. Although Apple's maturing enough now that some would consider it, to be a blue chip along the same lines of some of the more mature companies that are part of the Berkshire portfolio, particularly some of the big banks like Bank of America and American Express, on the financial side. So, it's definitely a more eclectic mix because, Buffett's getting the help from Combs and Weschler and, no longer from the late Charlie Munger, although Munger himself was always, a little bit more aggressive. I mean, his company, Daily Journal, big holder of Alibaba, which, is not a Berkshire Hathaway pick.
Paul, this is going to be tomorrow, the first Berkshire Hathaway annual meeting without Charlie Munger. Any thoughts on how things might be a little bit different there?
I mean, I think it's going to be, a celebration probably of Charlie's very long life. He just missed hitting the century mark. He would have been 100 on New Year's Day of this year if he had lived to see it. I think Buffett will probably be a little nostalgic and a little sad because, he always had Munger on stage, the yin to his yang, and, a lot of jokes and, quips going back and forth. And, I think we're losing that, obviously. I don't think that investors are going to get that same color from Ajit Jain and Greg Abel, the two operations guys. Greg Abel, the successor for Buffett whenever Buffett is no longer running Berkshire Hathaway. I think a lot of investors, though, would love to see Weschler and Combs on stage eventually to talk about those stock picks with Buffett, but there's no indication that that's happening anytime soon. It'll be Buffett and then probably Ajit Jain and Greg Abel.
Very good. Paul, we appreciate you joining us today. Have a great weekend, and we will catch up with you soon.
Thanks a lot, guys.
That is Paul LaMonica talking about Berkshire Hathaway, Warren Buffett, and their portfolio. Taking a look at markets. The Dow Jones is currently up 427 points. That's the industrial average. They run a whole bunch of them, but no one talks about any of the others. The S&P 500 up 58 points, and the NASDAQ up 309. So all three major U.S. indices up more than 1% as we head towards the midpoint of the day. We're just about out of time, though, so I hope everyone listening has a fantastic weekend. And don't worry, we're going to be back on Monday. Still a lot to come in terms of more economic data and more earnings next week. So make sure you tune in because we do have quite a bit we're still going to be getting to next week just in terms of what's coming. More Fed speeches, obviously. You always have those. Consumer sentiment data, jobless claims data, mortgage applications, whole bunch out there. Have a great weekend. We will see you on Monday.